Hello everybody, this is the Forex Fundamental Analysis for Thursday, July 13th. Brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Let's begin. First of all, we'll begin with the regular disclaimer, some housekeeping. A risk disclaimer. Trading foreign exchange and margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. Okay, and a few quick words about myself. My name is Johay Elam. I'm a Forex Analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and I focus also there on fundamental analysis. On the agenda today, we'll talk about the stories moving markets, some politics, but mostly monetary policy, changes, the next events to look out for, and key levels of support and resistance for some currencies. They have changed quite a bit, and we'll do that for all major currencies. So when we're talking about the dollar, we'll focus on dollar yen, about Yellen, discuss the euro with euro dollar, the pound, which is recovering, the Australian dollar also recovering, and the Canadian dollar, which is on a roll. Okay, so top stories. Fed Chair Janet Yellen gave her first part of the testimony yesterday. The next part is today. And she's somewhat worried about inflation. This prepared statement was a bit more concerned than her remarks in the Q&A session in response to questions by politicians. That was a bit more moderate, but gradually we've seen the dollar retreat. Brainerd, also a member of the Federal Reserve, she is a bit more worried. She is a known dove. Trump Jr., the son of the president, Donald Trump Jr., he's in deeper trouble, and this is having some effects on markets. So we know now that he had some ties with Russian officials last year, and suspicion of collusion is now a bit more significant than it used to be. For markets, this means that there is a high risk that the agenda of the president, infrastructure spending and tax cuts, things that markets want, that could trigger higher inflation and a stronger dollar, their chances are now a bit lower. And the Bank of Japan continues buying bonds, but this has less of an effect on the US dollar. Inflation data is becoming more important. We have that figure coming out tomorrow. So a bit more on what Yellen said, of course the most powerful central banker in the world, that inflation is still a big uncertainty for the Fed. They're monitoring inflation very closely. On the other hand, she did try to balance it out by saying that transitory factors are still behind the slowdown. This is a repeat of what we heard last month in the rate decision. Rates do not need to rise much further to reach a neutral stance. This is also something she said, and could also have a negative effect on the dollar. Growth should pick up in the second half of the year. This is a bit more optimistic. All in all, we've seen dollar yen falling. Other currencies, not so much. Or perhaps this morning we're seeing a belated reaction in some other currencies, such as the Aussie, but the strongest impact was seen in dollar yen. Other figures that we had, a figure that the Fed likes, job openings, they disappointed with only 5.67 million annualized. The Beige Book, another figure published by the Fed, it showed some wage pressures, mostly among the higher skilled. So we know that wages are not rising quickly. We learned that last Friday. And let's continue with further events. Today we have the Purchasing Price Index and Jobless Claims released together at 12:30 GMT. The second part of Yellen's testimony, this time in front of the Senate instead of the House, will happen today. More questions and answers. It's going to be quite long. I'm not sure we'll have new hints about monetary policy, but you never know. The bigger event comes tomorrow. The release of retail sales. Consumption is key to the US economy. We all know that. And consumer price index, inflation. Inflation has become much more important than it used to be even a month ago. Okay? The most important figure to look out for is core inflation. year over year. So it dropped gradually from around 2.3 early in the year, and it reached in May, it reached a low of 1.7. Let's see if it continues falling or if it bounces back, if it's transitory or not. Then we also have, after these big releases, we have consumer sentiment coming out at 2 GMT to close the week. Looking already into next week, we have import prices on Tuesday, another inflation figure, secondary one, and building permits and housing starts on Wednesday. Okay, dollar yen in general, falls and rises with Trump. We've seen a reaction to the news that came out earlier this week, and falls and rises with US indicators. We'll see that tomorrow for sure with inflation, maybe also today. Falls and rises with risk, stocks, yields, we're seeing this kind of correlation. And the bond buying done by the Bank of Japan does have some impact, but we're seeing the trend now more to the downside. Why? The uptrend support line is at risk. Let's look at the charts. We're looking at the OctaFX MT4 platform. Let me get that up for you right here. Okay, so this MetaTrader 4 platform, as you can see here, we can zoom in just a bit to look at the recent uptrend in dollar yen. We're seeing this move from the middle of June from 108.80 all the way, even breaking above the cycle high of 114.30, reaching 114.50, and now slipping a bit lower. Okay, now the fall isn't that devastating. We're at 113, still higher, but if you're watching this trend line, it looks to be broken. Okay, let's talk about levels in general for dollar yen. So to the upside, we're talking about 117 and 116 if we really break higher. Then we're talking about 115.45 was the high a few months ago. We're then looking at 114.30, still important despite this slight small move above the level. Okay, a bit lower, we're talking about 113.45, followed by which we are under now, 112.60, 111.80, 110.70, and 108.80, which with the line where this uptrend began. All right, so let's continue. That's dollar yen. We're waiting for confirmation, but it looks like the uptrend is gone. Euro dollar in here in the Eurozone. Every day we have another member of the European Central Bank talking, and they're sending mixed signals. It seems like they're happy with the current situation in Europe. We have more growth, we have more employment, inflation is moving slowly to the upside, but they don't want to see a stronger euro. So they will probably give us some news in September, but they don't want to get overexcited. They don't want the euro to rise, they don't want bond yields to rise. So euro dollar reached new highs this week, okay, but after reaching them, it retraced back to the levels we're familiar with. But the good news continues from Europe. Industrial output beat expectations with 1.3% growth, and in general Europe just looks more united after the G20 summit on the weekend, and with Brexit talks, and all in all the political situation looks positive at the moment. Of course, on Friday we have trade balance in the Eurozone, and next Tuesday we have final inflation data. Usually there are small changes, they could be meaningful. Look for changes in core CPI, but always the initial releases has a bigger impact than the final numbers. Also next Tuesday we have the German ZEW economic sentiment. I think inflation is more important. And looking already to next Thursday, we have the current account, wider measure of balance of trade. Okay, euro dollar in general, central banks are a bit more balanced. European Central Bank had an advantage, lost it, but it's now relatively balanced. The current consolidation at high ground, we'll look at the charts soon, could be followed by more gains. Growth is stronger in the Eurozone, at least in the first quarter. In a few weeks' time, we'll get fresh growth figures for Q2, and also politics look more stable. Let's look again here at the MT4, the OctaFX MT4 chart. This is the uptrend in euro dollar since the beginning of the year. Okay, reached new highs here, not going very, very fast. It's I would say 3 steps forward, 2 steps backwards. It's a bit mixed, but I think the trend in the bigger picture is quite clear. So if we're looking at levels, if we see a significant break to the upside, we're looking at 116.20. That was the high seen in 2016, last year. Then 115, we're very close to this level, okay? Followed by 114.45, the previous high. Then there's a big gap until 113. You can see that 113 is a clear separator of ranges. It used to be resistance, and now it's support, working very well as support. Then we have 112.30, 111.20, 110.25, this high right here, and 108.40. Okay, so the trend in euro dollar remains to the upside. We don't have big movements as in other currencies. Let's move to the UK, to the pound. So yesterday we had the jobs report in the UK. It was a bit better than expected. We had wages rising 1.8 as expected, and excluding bonuses, wages advanced by 2%. That's better than expected. In addition, jobless claims, even a more up-to-date figure for the month of June, they advanced by less than expected, around 6,000. So less people unemployed. Of course, it's good news. Yesterday we had a member of the Bank of England, Ben Broadbent, opposing raising rates, so it was a dovish comment. But this morning we had another member, Ian McCafferty, talking about not only raising rates but also unwinding QE. That means undoing the Bank of England's bond buying scheme, similar to what the Fed intends to do later this year, and that is already even more hawkish than expected. And McCafferty seems to have the last word, and this pushes the pound higher. Regarding Brexit negotiations are a bit stuck on agreeing about how much money the UK has to pay the EU, the divorce bill, and the rights of EU citizens in the UK and UK citizens in the EU, and some comments by the Foreign Minister Boris Johnson that triggered counter responses. It's of course a lot about politics, not only about policy. Okay, and the economic situation, despite the recent rise in the UK, we had another report by the British Chamber of Commerce which points to a slowdown. So some hawkishness from the Bank of England helps, but it's a bit mixed. Anyway, we have today the credit conditions survey, okay, from the Bank of England, a second-tier figure. On Tuesday, this is a big event, the inflation report. Next Tuesday, it will once again reignite the debate over interest rates. Some members want to raise rates, some don't, because inflation is rising, but the economy is still stuck. And it will also reignite the debate about the falling standards of living. We'll get another reminder that inflation is rising faster than wage growth. Okay, and look into next Thursday, and a week from now, we have retail sales in the UK. A bit of a volatile figure, but still of importance. In general, pound dollar, we're seeing some signs of stability on wages. That's the recent good stuff. The bad is, in general, that we're still seeing economic weakness and ugly Brexit negotiations. I can add to the ugly the uncertainty coming out from the Bank of England, but it seems that the hawks now have the upper hand. Let's look at the charts. The pound dollar chart here on the MT4 OctaFX platform. Pound now is moving to the upside, some weakness of the US dollar, and some hawkishness coming out of Ian McCafferty. So levels we're talking about are from the top. Above this 130.50, we're talking about 131.30. Here we're looking at 129.75, just under 130 as a line of resistance, followed by 128.90, then 128.20, a bit of choppy area, busy area here, then 127, 126.30, and way below 125. So there is no clear trend that I can see here. We had a few days of falls and now recovery. We can see here higher lows, which is a bearish sign. I think the situation isn't that good for the UK, but currently we're in a small move to the upside. Okay, let's move to commodity currencies, which are looking good. Australian dollar. We had consumer sentiment by a bank there, Westpac, rising by 0.4%. Good news. Chinese trade balance. China is Australia's #1 trading partner. It showed that imports are up 17%. A lot of these imports come from Australia. Good news for the Australian dollar. Last week we had the rate decision in Australia. The Reserve Bank of Australia, the central bank, was a bit dovish. This sentiment is now fading away and making way for a rise of the Australian dollar. If we look forward into next week, we have talking about the world's #2 economy, Australia's #1 trading partner. China releases its gross domestic product, GDP. Many people doubt the accuracy of the data, for good reasons, of course, but it still has an impact on markets. Then on Tuesday we have the meeting minutes by the Reserve Bank of Australia. Let's see if they're also dovish like the statement. And next Thursday we're already looking at the Australian jobs report, always a key market mover. Australian dollar in general drifting higher once again, moving on up. The correction has ended. We had a correction to the downside. The uptrend is resuming a bit slowly, a bit hesitant. Okay, volatility a bit low, a bit slow. Okay, let's look at the charts again. The MT4 chart here of the Aussie dollar. I was saying that volatility moves slowly, but now things have begun picking up. In the last few minutes we're looking at higher levels here. So if we look at levels from the top, 77.50 is the next level of resistance, followed by 78.40. 77.10, a recent high here, now works as support, followed by 76.35, 75.60, and 75.40s and 75.15, busy area right here. So we're seeing a resumption of the uptrend, but moves are, well, past day moves are a bit faster, but I would hopefully this higher volatility will continue, but we never know. Okay, and now our last currency, the Canadian dollar, which was a huge mover yesterday. So the Bank of Canada raised rates from 0.5 to 0.75. We got all the hints about that from the Bank of Canada, and recent data supported it, such as the jobs report on Friday. What wasn't totally expected is the statement from Ottawa coming out that further adjustments are on the cards. That was hawkish. That means more rate hikes later this year. They also upgraded the growth forecast, looking at the bright side of the Canadian economy. All in all, the Canadian dollar jumped. That means the dollar CAD crashed to 13-month lows. And in other news related to the Canadian dollar, oil prices are stable, and housing starts beat expectations with 213,000. Okay, next big Canadian event. First of all, it was such an important event yesterday. Don't know how many of you are trading the Canadian dollar, but that was a big event on dollar CAD, on CAD yen, on other crosses of the Canadian dollar. I think we'll have further reactions to this hawkish hike. We're currently seeing a small correction, but in general, the trend remains in favor of the Canadian dollar. We have the new house price index today at 12:30 GMT, and tomorrow foreign securities purchases. Both figures are not as important as the rate decision or jobs report or things like that. Next week we do have an important release. The manufacturing sales tends to have quite a significant impact. And looking already to next Friday, we have top tier figures. Inflation report. The Bank of Canada sees inflation as transitory, like in the US, and even said that without these transitory factors it would be much higher, would be 1.8 instead of 1.3. We have that next week, together with retail sales. Like the US, just 1 week later. Okay, dollar CAD is in a clear downtrend. That means in favor of the Canadian dollar. The Bank of Canada, its bullishness is dominating the scene. This is a phenomenon we're seeing for the past 3 weeks or so. And where will it find the bottom? At some point, it becomes oversold, becomes overstretched. It's a bit too much. We have to see some correction. We've already seen some kind of a correction yesterday. but let's see if we have an extension. Well, let's look at the charts. Okay, so this is again the MT4 platform is zoomed out in advance to show you that we're now trading at levels last seen a long time ago, but let's zoom in just a bit. This is the big fall that we've seen yesterday, this big candle here. A huge fall, reached a new low here of 126.80. Okay, bounced up from there, we're back to the 127 handle. In any case, levels from the top to the bottom, 133.80 was strong support right here, followed by 133. Another important support is 131.60. Sorry, these used to be support, now they're of course resistance. 130.20, 128.20, a recent low, but after the crash it turns into resistance as well. 127.50, which we're more or less at this point right now. Then 126.80, but 126.80 is just above. If we zoom out, we can see that 126.50 is more important. It worked as a low last year. Okay, and if we move even lower, we're talking about 124.50. So we're in a clear downtrend here in dollar CAD. Even if you put this downtrend support line, we even broke below the support line. So a very rapid drop of dollar CAD. Okay, so that's it for today. Thank you very much everybody for coming. Comments and feedback are of course always welcome. We have more educational webinars coming up about the Australian dollar and the New Zealand dollar. And that's it. I wish everybody a safe and successful trading day markets. Don't forget your stop loss, and see you soon. Thank you and bye bye.